Are you a swing trader? Are you an investor? Are you just interested in knowing when the market is in its bull phase, or when it's in a pullback, or when it's in a bear phase, or when it's in a rally phase from a short position? All very important, not just to the swing trader, but to the investor in the investor class. Do you want to know when to stop your asset allocation? Maybe when to do a little selling so you have cash available to buy stocks when they've been beaten down? Do you want to know where to put your money during times like these? What asset classes are moving up versus moving down? And would you rather do that, on a consistent, objective basis without somebody pointing to a bunch of meaningless charts, at least meaningless to you if you're not familiar with how they work, but you just need to know and you need to know precisely? Well, let me show you something. I'm Bagger Don at StockMarketCaddy.com, and our subscribers get a video view of what we call the swing machine. Now, we do this on ETFs, we do this on on stocks and what have you, but where the banks play is in what we call the futures market. So you really, we want to take our cues from the futures market. This here is the Russell 2000. This is the S&P. This is the NASDAQ, and this is the Dow. We're looking at the daily, the weekly, and the monthly for each of the markets. This is the VIX, the volatility index. And we also look at the daily, weekly, monthly of the VIX. The reason being is if you were to look at these items versus these indices versus the VIX, it's almost like looking at a Rorschach test. Say that 3 times. It's the inverse. So when we see the daily VIX go long 52 days ago at 5 p.m. on October 9th, we knew the markets were in trouble, and then we helped to monitor ourselves, or the swing machine helps monitor the VIX position. So a green VIX on a daily basis usually means a red market or a sell market. So let's look at the daily. The daily short on the Russell went short 60 days ago at 5 p.m. on September 27th. Now, one contract short here, one contract would have been 20,000. More importantly, how much money could you have saved if you had just sold some of your winners back on September 27th? We look at the weekly. The weekly is also short. It went short 9 weeks ago on October 26th. This would represent the investor class. Okay, this would be for the daily is more for the swing trader. He's not in and out, but he likes to play the market. The investor just wants to be on the right side of the market, for weeks on end or months on end. This is the time frame, the weekly, that tells us that we are in a bear market. We went into a bear market on the Russell on October 26th. Now, one contract you would be up $9,880. But I ask you, how much would you have saved if you had just sold some of your Russell or the 2000, the Russell small caps back on October 26th. Now on the Russell monthly, this is the long-term investor, and he needs to take precautions right here, right now. It is dipping. It is not in a short mode. It's still long, and it's been long for over 100 months. And you can see he would be up, but he does want to take precautions. If the monthly turns red, we will be in a recession. Okay? So the weekly short is a bear market. A bear market. A monthly short is a recession, and it's getting very, very close. The ES contract, the S&P, went short 51 days ago. One contract would be up 18,005 on October 10th is when it went short. This is from the Swing Machine. How much could you have saved if you knew that? The weekly is in a bear market. The S&P 500 went into a bear market 5 weeks ago on November 23rd. The monthly is also hinting that we could be pushing into a recession. The NASDAQ on a daily 52 days ago. There's that date, October 9th. The NASDAQ, full of the big winners. One contract, 27,300. How much could you have saved from Amazon, Apple, the FANG, if you knew to sell on October 9th? How much more could you have made if you got some short options or protected those profits? The NASDAQ on a weekly is in a bear market. It went into a bear market 5 weeks ago on November 23rd, the same time frame. So while everyone else was enjoying family in Turkey and Thanksgiving, Wall Street was getting ready to pull the plug. Not getting ready, they did pull the plug. What do they know? The monthly is dipping. Dips much more, it too will indicate a recession. The YM daily is the Dow 27 days ago. It's up 14,000 on November 13th. If you had owned Dow stocks, how much could you have saved if you just knew it was time to ring the cash register? Things like Home Depot and GE, and on a weekly basis, it's in a bear market just 2 weeks ago, so it's not too late. Things could get much, much worse. That was December 14th, and it's close to a dip. Now, we never know how far a market will run or how deep the bear will go. We don't know if, in fact, we are going to go into a recession. But please understand, the Russell, the Swing Machine, told us to get long the market 100 months ago. 100. Back on September 30th of 2010. The ES, this is still a long, it's a dip. It went long on December 31 of 2010. The NASDAQ went long on a monthly basis February 26th of 2010, and the Dow is October 29th of 2010. We don't know if we go into a recession. It could be 20 months, 30 months, could be longer. You don't want to see these monthly profits erode in the way in which they took away your daily profits if you were late to the game. I'm Bag of Don at StockMarketCaddy.com. I'm limited by YouTube and what we can show. Our members get this and much, much more each and every night on a high definition video representation. If and when the market bounces, we will see it. that could be your opportunity to do what? Not buy the dip if we're in a downtrend, but to sell the rip. If you'd like to chat, my name is Don Marshall. My cell phone is 813-758-8263. And guess what? I work all the time because this is what I do. We're not brokers or financial advisors. We're not making specific recommendations. We're sharing the technology that my wife and I built some 15 years ago. Not last week, not last month, not 6 months ago. This isn't made up of averages. It was something we built 15 years ago. And if you want to talk to me, you just call, and it's my cell, and it can be the weekend. It could be Christmas Eve. If I'm near my phone, I'm going to pick it up. If I'm not, I'll get back to you. This is important to us. If it's important to you, feel free to call. If it isn't, we wish you the very best.